Hi guys, Max here, and this is your daily market update for yesterday, the 21st of February. Now it was pretty crazy to be honest, as I'm sure you have noticed. US markets were actually closed for President's Day, but futures moved and markets all around the rest of the world were open and everything took a major hit. Now what exactly happened? Well, tensions in Ukraine deteriorated a serious amount as most of the day was spent waiting for Putin to make a speech. Now I am going to make a full-length video about this development in Ukraine itself, going into detail with exactly what happened, what we should expect next and everything like that. But for this market update, we really only need to know the gist of what happened so we can look at what happened to the markets. So then, what did happen? Well, Putin gave a really long speech, and in said speech, he announced firstly that Russian troops will be occupying the contested eastern regions of Ukraine, where there has been a conflict going on for 8 years now. Russia is also going to be recognizing the legitimacy of the two states in that region, which goes against international law, and it's warranted condemnation from loads of different nations for a bunch of reasons, and it's even gone so far as to stop China from openly supporting Russia. Now, the treaties which Russia is now passing as we speak will even allow Russia to build permanent military bases in these breakaway regions. Their military will be able to go where they please in these areas. Basically, Russia has invaded these two contested areas of Ukraine and they have annexed them. Now, there has been some limited fighting as well. A few Ukrainian soldiers have been killed by Russian shelling in the contested area, and Russia is now claiming that some Ukrainian soldiers invaded Russia and they had to kill them, which, to be perfectly honest, there doesn't seem to be any evidence to support this idea. It's just coming out of the Russian state, so there's a 90% chance here that that's just an outright lie. Now, I am unfortunately going to have to annoy a lot of people who have decided to support an authoritarian state right now, but there is no way to blame the West for this action. This is an escalation, it's a borderline invasion of Ukraine itself, and it is absolutely Russian aggression, and if you don't recognize that, then there's really nothing more I can say to convince you otherwise. There was, at least in the past, a limited argument prior to this that basically suggested that Russia was just trying to stop the growth of NATO, but all diplomacy was thrown away yesterday and a country was invaded. To make matters even worse, Putin has been playing Western leaders constantly. Macron claims to have some kind of decent relationship with Putin, and he was assured just a few days ago that these contested regions would not be invaded, that Ukraine as a whole would not be invaded, that no escalation would come, and that Russian troops would withdraw. But just a couple days after that has happened, Macron has been left in the dirt once more by Putin, as he's just turned around and lied once again. Now, this is an absolutely huge escalation, and I can't emphasize that enough. Markets have been rattled by this, and they will continue to be rattled by this. And it's actually such a huge development that even China isn't really supporting Russia's actions. The Chinese ambassador to the UN came out and called for restraint and de-escalation, the polar opposite of what Russia has just done. Now, we will, of course, talk about this later in the day again. I'm going to put out another second video talking exclusively about the situation in Ukraine, Russia, what their aims are, and why this really shouldn't be so unexpected. But for the rest of this video, how did the markets react? Well, as you might expect, in one word, badly. The stock 600 fell about 2% yesterday, and it's now sitting at its lowest point since October. To make matters worse, overnight futures for the stock 600 fell another 4% on top of that. Russia's MOEX index fell 14% on this news, and it's now down 21% over the last week alone. That is absolutely monumental, and the only time in recent memory that it's been worse than that was when Russia invaded Crimea back in 2014. Now, American markets were, of course, closed for President's Day, but futures, of course, continue to run, and they've been dropping on this huge escalation as well. The S&P 500 is looking like it's down about 2% overnight, and the Nasdaq is down by as much as 3%. This is, of course, on top of the already big losses we've seen recently, and it is now enough to send the Nasdaq way back below correction territory, and it's probably going to push the S&P 500 into correction territory as well, as it will be officially down over 10% from its all-time highs. Now, some people have been saying things along the lines of, why are these stocks all dropping? It just doesn't make sense. But there are a few reasons behind this, and all of them are, of course, related to Ukraine. The first one here is that there are going to be sanctions against Russia as a result of these actions, and that will impact the markets. Western companies will probably not be able to work with Russia itself or Russian companies as easily, and that will reduce some revenues and profits. And this is more of a problem for some companies and less for others. But if we see some really major sanctions like Russia being cut off from SWIFT, then this will have huge effects for companies all over the world. Russian companies will of course be hurt the worst by these sanctions. That's what they're designed to do, and that's why the Russian index collapsed 14% instantly on this news, because those companies are really going to struggle from this development. European companies will likely struggle as well. They will see pain from this, reduced revenues and profits across the board, and that will impact them as well. Now, the second major reason so many stocks tanked on this is because consumers will probably change their spending a little bit as things look less rosy, like they do right now. Simply put, if people are afraid of World War III starting, they're probably going to be a bit more conservative in their spending, waste less of their money on getting their nails done or going to the cinema, and these consumer changes will be felt across the entire economy, and therefore the companies and the stocks which make up these economies which operate in them, they will be impacted too. Now, the other major reason for this huge dip on this news is that sanctions or even war with Russia will accelerate inflation and make supply chain shocks even worse across the world, which means the inflation situation isn't going to get better, which is bad enough on its own, but it also means we should be expecting higher interest rates, tighter monetary policy, and Fed asset sales, for example, across the board. All of the fears around the Fed that we've been seeing recently, well, they're going to get worse on this news as well, because inflation is going to spike, as we've just seen oil and gas prices spike as well. We're probably going to see grain prices across Europe spike, as Ukraine is a major exporter of grain. There are so many consequences like this which aren't necessarily obvious right away, but they will have major impacts, and supply chain shocks will get worse. So equities fell across the board, but what else happened? Maybe in the world of foreign exchange? Well, as you might expect, the Russian ruble lost some of its value along with Russian stocks. This makes perfect sense. Very simply, the currency will be less useful, it will be less valuable to own because you won't be able to use it when trading in separate countries when these sanctions start to hit Russia, so the value has decreased. Now, other currencies didn't really see any major changes here. The dollar, the euro, the pound, or even the yen, for example, all held pretty firm, moving up or down by 0.1 or 0.2%, but no major shifts. Bonds, though, did see some major inflows. Again, as you would expect, they are a safe haven asset class in times of uncertainty and fear, and there's an awful lot of uncertainty and fear going about right now, so bond prices rose and yields fell. The US 10-year Treasury fell 4 basis points, and its yield now sits below 1.9% again. Germany and Britain's 10-year bond yield fell 2 basis points each as well. Now, another thing that won't surprise you, or shouldn't at least, was that oil prices spiked on this news once again, and they are nearing $100 per barrel. Brent crude oil, which is the standard used in Europe, rose almost 4% yesterday, and it now sits just below $99 a barrel, and WTI crude oil is going to be heading in that same direction. Gold prices, of course, are still very high, sitting above $1,900 an ounce after being stuck around $1,800 for months now. They only actually rose about 0.3% yesterday alone, but are up 5% or even more than that over the last couple of weeks, as Ukraine has started getting more worrying and people have been changing their portfolios and moving out of risk-on assets and towards safe havens like bonds and gold. Now, the only other market we really need to tackle today is crypto, and here you are either surprised by what happened or you aren't. Now, if you believe that Bitcoin is a hedge against inflation and uncertainty, then Bitcoin dropping on fears of war will probably be a surprise to you. But if you're like me and you see Bitcoin and the rest of the crypto markets as well as risk on assets, then you were not surprised as prices dropped. Crypto markets dropping makes perfect sense to me. They're risky assets and volatility is high and only going to get higher as tensions continue to get worse. Now, what actually happened? Well, yesterday alone, Bitcoin fell about 1.5%, and Ethereum fell 3%, and the rest of the crypto markets, altcoins like Sol, ADA, and XRP, they fell 8, 9, or 10%. One thing that is worth mentioning here is that over recent months, Bitcoin has been performing better on the downtrend than altcoins, likely due to more confidence in its ability to stay around forever, and thanks to institutional investment that's come about over 2021 that doesn't necessarily jump in and out of investments the same way retail crypto traders do with whatever altcoin is hot at that point in time. Bitcoin is, in my opinion at least, pretty clearly more reliable and less volatile than the rest of the crypto market, even if it is still far more volatile and risky than most traditional financial markets and assets. Now that is it for the day, guys. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up. You don't have to buy anything. You don't have to hand over any card information. So if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Personally, I'm holding about £55,000 right now in cash on stablecoin sites like BlockFi. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.